President Trump says the U.S. will place a 25% tariff on imports from all countries that buy oil or gas from Venezuela. In a Truth Social post Monday, the president accused the South American country of sending undercover criminals and gang members to the U.S. He went on to write that Venezuela has been, quote, very hostile to the United States, and that the tariff will take effect April 2nd, which he calls Liberation Day in America. According to research and consulting firm Rystad Energy, China and the U.S. have been the top buyers of Venezuelan oil in recent months. India and Spain also import small amounts of crude oil from Venezuela. CBS News contributor Javier David joins us now. He's a business editor for the Dallas Morning News. So good to see you. What would this tariff mean for China, and could the other major importers of Venezuelan oil also suffer?
Yeah, I mean, there are two choices, really. Just Venezuela's clients are going to have to pay higher prices, which invariably will be passed along to consumers in those countries, or they have to move to buying on the black market. And there's a reason why places like Russia, Iran, Venezuela have managed to stay afloat in the face of international sanctions, because there's always willingness to buy from some party to buy under the table oil for what they can produce, especially for energy-hungry markets like China that can't produce their own supplies. And Bloomberg report shows that China by itself took in more than 40% of Venezuela's oil exports in February alone.
Wow. The U.S., also a major importer of Venezuelan oil, notably through Chevron. In addition to the tariff announcement Monday, the Trump administration extended its deadline for Chevron to cease operations in Venezuela. Walk us through that.
Yeah, so basically what it means is they'll have until May 27th to wind down this license that they had to operate in Venezuela. This is something they've had since 2022. They had initially gotten a 30-day reprieve to sort of wrap this up, but they're getting an extension. But it's kind of an example of policy that's driven largely by decree. Much like the Trump administration's moves to sort of safeguard the auto industry from the fallout of the tariffs, the government is once again kind of picking and choosing who the winners and losers are. The policy isn't being applied uniformly. So basically, there are people that are operating in the sector that have to abide by whatever it is that the White House decides. But, you know, it's not like everyone is reaping the rewards as well as the pain. Everyone that is operating here, there are at least one or two players that get protected.
So these so-called secondary tariffs on Venezuelan oil importers are in addition to those other tariffs set to be imposed April 2nd. As I mentioned, Trump has dubbed that Liberation Day. What can we expect there?
Yeah, look, just more volatility, more investor pain, because it means that the White House is really digging in its heels on this fight on tariffs rather than the reverse. There's a reason why markets have become very headline driven and very hypersensitive to any suggestion that they're going to be delayed or canceled, because investors just simply don't like them. And the market, the prices in the market rather, are kind of discounting this impact on growth, which is down, and the impact on inflation, which is more than likely to be up.
I got to be quick with you on this, but how is the stock market reacting to all of this?
Yeah, look, the White House is, they're trying to turn back the clock on what it perceives as like what used to be the economy, which is manufacturing based rather than services based. The service economy is 2/3 of what we consider to be the economy. It's one of the reasons why the U.S. is considered this sort of exceptional place in the world. And the whipsaw market is a reflection of just how jittery investors have become about this very helter-skelter implementation of the policy, and what people really are starting to fear is going to be recessionary or stagflation.
Javier David, thank you.
Sure.